think what we have done is we have broadened the range, right? Earlier it was 24 to 25 last year. We have broadened the range. If you look at last year, when we gave 24 to 25, it was on the back of cross currency. It was back of pricing and lower growth trajectory. But we still delivered at the higher end of the margin guidance, which is 24.7, which is pretty much same as earlier year. That was possible primarily because of the laser sharp focus on operational efficiency, whether it utilization, whether it is subcon expenses, whether it is on-site employee costs. This year we have broadened the range, 23 to 25, right? The reason for broadening is that we want to closely watch how the rupee moves, because already the rupee has moved about 3.3%. If you look at from the FY17 average, that is one factor to consider. So the second factor is also that we want to proactively make certain on-site DC investments in the United States to address any potential changes there. So I think the range is broadened. So we'll certainly focus again to what extent the rupee and to what extent these on-site investments we can mitigate with the operational efficiency. So it is just a broader range. Right. EPS is again a factor of the revenue growth, factor of operating margin. So I'm sure that we'll certainly try to focus on how to optimize the operational efficiency and things like that.
Sure.
So that's where we are.
Okay. Praveen, segment-wise, what is working for you now? And I remember a few quarters back, you outlined this vision for, at least $1 billion in TCV every quarter. Is that really possible in the current environment?
See, if you look at it in the last 4 quarters, on an average, we have been doing about $800 million TCV in every quarter. So it is possible. The only thing is the deal sizes are coming down, actually, unlike in the past.
And the pricing is
pricing is obviously pricing is under pressure. Large deals means a lot of pressure on the pricing as well. But it is possible. I mean, if you look at the pipeline and other thing, and if you assume a normal course of deal closures, it is possible to hit $1 billion. So we are not giving up on that. But we are fairly comfortable because we have consistently now, in the last 1 year, we have been around $800 million. It's a function of deal size, it is a function of deal closure and other things. But it is doable. I mean, that's what
BFSI consulting is looking up now.
BFSI is looking up. Consulting, as I said, this year our focus is more on getting the fundamentals right. So we are not focusing too much on the growth. We are focusing more on getting the basic right, getting the profitability back, and getting more consistency in the consulting outcomes.
Right.
So that's our focus this year.
Ranga, why are you still saying either buyback or dividend? Considering you've amended your AOA to incorporate buyback a few weeks back, what's really stopping you from spelling out a buyback at this point? Won't it also be more efficient in terms of return ratios?
So I think the capital allocation policy clearly talks about 2 things, right? How much of future cash flow will be distributed, which is 70% of free cash flow. It also talks about out of the current cash on the balance sheet, up to $2 billion is planned. In fiscal 18. We are listed in multiple stock exchanges around the world, in NYSE, in Euronext, Paris, London, and so on and so forth. We are required to comply with multiple regulatory requirements. So what board has said is that, we will, this is the plan that we have through a combination of both, we indicated dividend and or stock repurchases. So once all these regulatory pieces that we need to look at, the board will exactly announce the exact mechanism of that.
Right. Praveen, what about salary hikes? We haven't heard too much about that. Does the margin range, factor in a salary hike as well?
Warriors, look at that.
Yeah.
Hey, Chandra.
Yeah.
I mean, we have factored some amount of it, but we have not yet decided the quantum. Like last year, we will probably stagger out the compensation increase. That's what we did last year. And again, the focus like last year will be increased differentiation amongst high performers and rest of it. But the exact quantum and when we will do, we have not yet decided. So as and when we decide, we'll announce it.
Right. Ranga, you mentioned on-site expenditure. Again, will that play a factor in margins? Because now there will obviously be some pressure to increase local hiring, to invest, more. So in terms of the visa policy also, what risks are you factoring there on the cost front?
I think there are multiple regulatory proposals in the United States and so on and so forth. So it is very uncertain which one will be finally adopted, etc., etc. So what we have to do in preparation is really to ensure that we have on-site development centers where we'll have local hiring and also have client proximity centers. So those are the investments. So there are multiple regulatory proposals, right? And the trajectory of them, which one will be taken, which will be the final adoption, it is too early to say.
Finally, I have two viewer questions from Twitter. So one is from the handle of Arvind Prabhudi. He says, what is the revenue portion from digital and consulting?
Yeah. No, we don't give the breakout of this one. What we talk about is consulting and system integration, CSI, that continues to be about 32.5% of our revenues. On the digital, we have not so far we have not given a breakup. And this quarter, we will start, as Vishal said earlier in the other conference, we'll start looking at giving breakout of different parts of it, new services, new software and other things. As part of it, we'll take a decision on that.
One last question from Twitter. It's from Ashutosh Ketan. Yeah. He says contribution from top clients has been consistently reducing. Is this impacting overall revenues?
What is exactly the point?
I think contribution from top clients has been reducing.
I think if you look at this particular quarter, the top line grew 6.8% quarter on quarter. If you look at the quarterly, there will always be volatility. If you look at the top 25 clients, they grew close to 4% year on year. So within the top 25, there is always a churn, right? And it's not really, the way to look at it is two ways. One way to look at it is, hey, you don't want to have very high concentration ratio of clients. The second way of looking at it is, we need much more penetration of our top clients. If you look at the number of $100 million clients, we were about 12 about 3 years ago. Today we are 19. So we have a good penetration amongst our top clients. The number of $100 million clients have increased from 12 to 19. At the same time, quarterly there will always be churn.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.